guys, welcome back to my channel. So for those who don't know me, I'm the dumb trader. I'm the trader that is dumb always, but I keep improving, right? I keep improving to become stronger and stronger in the market. So today why I want to do this video is because I'm going to start a new journey, which is I'm going to document every single trade that I take into the YouTube channel. So I want you guys along with me to see my growth and to see what I'm doing right, what is the things that I'm doing wrong, right? So yeah, that's the beginning of document everything. So this video is the introduction for that, and basically I'll use this $100. If you saw it, this is the $100 account, real risk. I'll use this $100 account to trade, and I will not going to risk more. I just risk a bit and just want to see whether I am doing good in the market or not, right? So I want you guys with me together. So because I'm not disciplined enough, that is the thing that I found out. So I want to do YouTube channel to document the things that I do it right. I want you guys align with me so I can more disciplined enough. So yeah, so that is why I'm going to start this new journey, right? So that's much it is, right? So right now I'm going to go through what is the strategy I'm going to use. It's called it as a ICE method. It's my own method that I combine the things that I learned into my strategy, right? So you might wonder, what is ICE method? What is the strategy that I using? What is ICE method? Basically, ICE method is the strategy that I use. I combine ICT, CRT, and also execution with volume, right? Volume delta. That is my strategy right now, right? So this is the strategy that I would use for my execution. First of all, I will go through the higher time frame area first. Time frame area. What is the higher time frame area? I go through a 15-minute time frame demand area, 15-minute time frame demand area or supply area, and then I'll go through the 4-hour low and 4-hour high maybe, and then I will go through the daily time frame low or daily time frame high, which is a previous day high and previous day low. That is the things that I will go through in the high time frame first. Go through the 15-minute time frame. I will analyze the 15-minute time frame. So what I'm looking at 15-minute. For example, if the 15-minute is trending, alright, it's making lower high, lower low, lower high, lower low. What I will do is that under this area, I'll place one things. This is one things we call as this one thing we call as fixed range volume profile. Basically, what is a fixed range volume profile? Let me show you. So fixed range volume profile basically is a bell curve like that. So I'm a finance student. I know about some things called statistics, right? Statistic development. So what they go through for the statistic is that they'll go through this, what do you call it, as a bell curve. This thing is, we call it as a bell curve, right? They will do this statistic development. For example, they go to search for average man height. They'll go through these things, right? For statistics person might know that they will go for search for maybe in the world the average man height, how many is that? So when they go through this, they will form these things, we call it, well, bell curve. So surprisingly, under this average man height, 75% of the person will fall under this area, which what we call it as an average, which is the average man height. 75% of the people will fall under this area. 75%. Okay, and then the rest of the 25% either form under this area, which is we call it as a outlier. We call it as a outlier. Wait, we call it as a outlier, which 25% of the people will fall under this area, which is the either above average or below average. This one is below average, this one is above average, and then this one is a positive, this one is a negative, right? So basically, whether the man will fall below average, maybe 145 cm, and then maybe this one is a 190 above average, they will fall under this one. So you might wonder how these things is going to be linked to the trading world, right? So let me show you, right? So I developed this from a YouTube guy. So basically in trading world, this things is placed like horizontal like that. Basically it's like this one, like this, and then this and this one. Basically it doesn't have this area like that, it's like that. So this is what we call as volume area high, and then this is what we call as volume area low, and this is what we call as our point of control, right? It's a middle point for that, or we call it as a median if not mistaken. It's a median, it's a midpoint for that. So these are things. So I will go through the 15-minute time frame. If I were looking for a sell, I will want to use this swing, right? This high and this low to place my fixed volume delta, and then I will and then is the fixed volume delta will going to tell me which is the volume area low, and then which is the volume area high, and then which is the point of control, right? So whenever the price is fall under this volume area low, I will looking for a reversal, which is I will looking for buy under this area, under this volume area low area, right there. I'm looking for buy under this area. So how can I going to buy? I'm not going to simply buy under this area. What I'm going to identify is that I'm going to find whether we have 15-minute demand area under this low, or we have like previous daily low under this area, right? Call it as a previous daily low, or either we have one thing's 4-hour low under this area, which I want to see the price 4-hour low, this one. I want to see the price react on this kind of area first, and then I will consider to take a buy. So what is the things that I will consider to take a buy? Okay, so I will use CRT. So under this area, I will consider to using CRT to take a buy if I'm looking for buy, right? After this key level has been hit. So what is CRT basically? CRT basically is means that, for example, this one is a bearish candle, okay, and then the next one also a bearish candle, okay, with a wick right there, with a wick right there, wick, and then suddenly the next candle, what is formed is that we form a bullish candle, right? We form a bullish candle, but with this bullish candle, the suddenly we form a bullish candle, and this candle is not closing below this wick, right? It just gives me another indications that the buyers is coming to kicking into the market, and then we see that the price is not closing below this low, which we call it as CRT. We call it as CRT, candle range theory. So we saw this CRT. Basically, if you zoom into more lower time frame, you basically will looking the price action is like that one, drop, and then in lower time frame, maybe second or even millisecond, the price is like that. The price break this low and then create this equal high below this low, and then basically is create a market structure shift right there. Basically the price is create a minor market structure shift under this area, and then what the price is doing is that it close, like go through this and then close like that. So under the lower time frame is looking like that. So means that in lower time frame the price is, the buying pressure is starting to kicking in. Buying pressure starting to kicking in this candle, right? So this is the time that I'll going to entry right there, right? And then I'll place the stops below the low. I get entry right there, and then my TP is somewhere right around this area like that. So basically that is the things like that, and then that is just a part of my strategy only. If you guys want to learn more about my strategy, you can comment down below. I'll go through more details about my strategy, and also I want you guys to along with me, right? I really hope you guys will along with me, because I want to document all the journey that I going through, whether it's bad, whether it's good. I just want to honestly documenting everything. So that's all for the video. If you like it, please subscribe. If you don't like it, just do whatever you want. Peace out.